Hi, and welcome to Edolab Markets. Today we are going to work with a classic momentum oscillator, using Edo TRX Core Cross. TRIX takes the price, smooths it with 3 exponential averages in a row, and then measures how fast that smoothed line is changing. The triple smoothing is the whole point. Most of the small noise is gone before anything is measured, so what is left is the underlying pace of the move. This version puts 2 of them on the chart, a fast one and a slow one, and reads the distance between them. On Honeywell Weekly the panel is calling the bias bearish, with momentum already fading. In the window you have 2 lines and a histogram. The thick blue line is the fast TRIX, with a 5-period setting. It reacts first, and it swings hard. The thin yellow line is the slow TRIX, with 9 periods. Same calculation, longer memory, much calmer shape. On the Korea ETF you can see it clearly. The blue line has just collapsed from above 4 to below 0, while the yellow one is still coming down slowly. 2 speeds of the same measurement. Everything this indicator does comes from comparing them. When the fast line crosses above the slow one, the indicator prints a green triangle at the bottom of the window. That is the bull cross, and it means the recent pace of the move has become stronger than the average pace. On Litecoin Weekly there is one on the very last candles, with the histogram turning green underneath. And here is the honest reading. Price is sitting at the lows of the whole range while this cross happens. A bull cross tells you the downward pressure has eased. It does not tell you the trend has changed. The mirror image is the bear cross, the fast line crossing below the slow one, marked with a red triangle at the top. On Ford Weekly you have one of them right after the last push, with the fast line rolling over first. From there the histogram flips to red and keeps growing on the downside. Back in 2022 the same pattern showed up at the top of the whole move. These crosses are not entries. They are the moment the short-term pace loses against the medium-term pace. The histogram is simply the distance between the 2 lines, drawn as columns. When the fast line is above the slow one, the columns are green and above 0. When it is below, they are red and below 0. So the histogram crosses 0 at exactly the same candle as the 2 lines cross each other. Same event, 2 ways of seeing it. On GE Aerospace Weekly the columns are green again after a red stretch, with the fast line back on top. Now look at the colors of the columns, because there are 4 of them, not 2. A bright green column means the histogram is above 0 and still growing. The move is accelerating. A faded green column means it is still above 0, but shrinking. Same direction, less strength behind it. On the bearish side it works the same way, bright red while the fall is accelerating, faded red once it starts to run out. On Sugar Weekly the panel reads bullish and expanding, and that is the tone you can see on the last columns. That fading tone is the part most people miss, so let's stay on it. Cleveland Cliffs Weekly had a bear cross a few candles ago, and the columns went red straight after it. But look at the last of those columns, they are shorter than the ones before, and the tone has gone soft. The panel is calling that fading, with the arrow pointing the other way. Selling pressure is still there, but it is losing pace. That usually shows up well before any cross. It is a warning about the current leg, not a signal against it. There is one more reference in the window, and it is the dashed line at 0. 0 is not an average of anything. It is the level where the smooth price stops changing. Above it, the smooth price is rising. Below it, it is falling. That applies to both lines on their own. On the investment-grade bond ETF, both lines spend their life crossing back and forth around zero, which is exactly what a range looks like from the inside. Two separate alerts are built around that zero crossing, and we will get to them in a moment. All of it is summarized in the panel, in the top right corner of the indicator window. The first row is the bias, bullish when the fast line is above the slow one, bearish when it is below. The second row is the momentum state, and it carries the four tones we just went through, written out. The last row keeps the two lengths in view, so you always know which settings you are reading. On the French index, the bias is bullish while momentum is already fading, and that pair of words is the whole reading in one line. Let's open the settings and go through them. The first block holds the two lengths, 5 for the fast tricks and 9 for the slow one. Those two numbers change everything. Shorter values give you more crosses and more noise, longer values give you fewer and later ones. The display block lets you switch off each layer on its own, the histogram, the lines, or the cross markers. So you can leave only the histogram if you want a clean momentum read, or only the lines if you prefer the crosses. Colors and widths are yours as well, for both lines and for the two cross markers. And the panel has its own corner and a dark or light theme, to match the chart you work on. On the dollar against the Swiss franc, the defaults hold up well, and 5 and 9 is the right place to start. The indicator ships with 4 alerts, and you reach them from the Create Alert dialog. The first two are the crosses themselves, fast above slow, and fast below slow. The other two watch the histogram crossing zero, up and down, which is the same event read from the columns. None of them is a buy or a sell order. They tell you that a condition has been met on the closed candle. Edo TRX Core Cross is free and open source. You will find the full script on TradingView, and everything else on our website, www.edolab.io. Structure before signals. This is Edolab Markets, and we'll see you in the next video.